Hi, welcome back to the channel. Now, in this month's December stock market outlook, I'm going to walk through a really high-level, broader market overview of the US stock market. I'll probably spend around 5-10 minutes just walking through all of the broader US market indexes. And as usual, I've got around 20 of my best stock charts for your watch lists going into the busy Christmas period. Hopefully the Scottish accent isn't too difficult to understand. It has taken a long time to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. If you follow me closely on X, hopefully my charts have helped you over the last month to navigate a little bit of a tricky November, and hopefully my work on the indexes last month helped you to get a little bit defensive ahead of the little minor correction that we've seen across the small cap space. But for disclosure, before I get into this, myself or my clients may hold positions in some of the names mentioned, but I have clearly highlighted any disclosures on the charts. I think most of you know by now that I don't use any magical hindsight indicators. I timestamp absolutely everything, which is hugely important for the field in which I work. I'm one of the very few who go on the record with their work. Now, before I get into it, for those of you that are new to the channel, I'm neither a perma bull or a perma bear. I analyse the charts and the data as it comes in, and I just draw very, very logical conclusions using my own custom built charts. I've got a lot of really great charts prepped for you today. I think if you are a trader, if you are a long-term investor, if you are a money manager or a financial advisor, you'll probably find a lot of value over the next 30 minutes. But please do pause the video. Very, very important disclaimer before we kick on. And as always, please do smash the like button, share and subscribe. If you have a lot of followers on social media, please do share. It really does help with the algorithm and really does help to get my work a lot more noticed. And if you do stick around to the end, I have a bit of an announcement to make later in the video. But as always, where I want to start is kind of with seasonality. Now, seasonality, the market has just slammed shut for November. The S&P 500 has eked out a 0.1% gain for the month. I know it's not much, folks, but I think where we were 10 days ago, I think it's probably quite welcome. But the seasonality, obviously over the Christmas period, I think everybody's asking the question, Sam, are we likely to get kind of any Santa Claus rally this year? We won't know until later in the year, because the Santa Claus period is the period between Christmas and New Year. But seasonality for the month of December, as always, is quite strong. Now, a couple of charts that I just want to elaborate on. I've had a lot of messages on X because I have been sharing quite a lot of content over the last few weeks to help a lot of folks kind of navigate, like I said, a bit of a tricky period. I think a lot of folks, if you were paying attention to a lot of the narratives on social media, was that the market's about to fall off a cliff and crash again. Something that I just wanted to touch on. And of course, you'll notice if you're new to the channel that I like to keep my charts very, very clean and easy to understand. But two things I just want to point out here is with the S&P 500, one of the charts that I've been kind of sharing with our clients over the last few weeks is just this big support level that the market's had around that 650 area. Now, last weekend, there was a little bit of a change in character in terms of what was happening with the major averages. But under the surface, we had a big down week for the S&P 500, but the number of stocks within the S&P 500 had a big reversal. So there was a lot more stocks advancing within the S&P 500 than what was declining. Now, for me, that's obviously information that I like to pay attention to. It's not just with the S&P 500. We also seen exactly the same thing with the NYSE composite as well. So last week with our clients, I was basically just communicating that there is the potential here that the bottom is in for this big or minor pullback, I should say. Obviously it was a bigger pullback. A lot of the AI names, for example, cut in half. A lot of the small caps, micro caps down, 40 to 60% in some cases. So we are now starting to see some big reversals over the course of the last week. So going into December, the hope is that these charts will break out to the upside. Another chart that I shared with social media and X last week was just the Fear and Greed Index. It gets a little bit of a bad rap. I understand why. Obviously sentiment data isn't the greatest. I much prefer price. But going back over the last 5 years, going back to COVID, certainly when we get into these extreme fear scenarios, the Fear and Greed Index is actually pretty decent at pinpointing tradable market lows. So again, another one of the charts last weekend was, and again shared it with X and social media, was that it's a pretty good indication and to potentially start looking for stocks to buy. I get that the whole doom mongering sells, you have the markets in turmoil narrative quite a lot of the time, especially if you pay attention to the mainstream financial media, etc. But coming into this week, I was actually expecting a little bit of a turnaround, and that's exactly what we've seen as the week has progressed. My longer term outlook for the S&P 500 hasn't changed. It has been a little bit choppy at these 6,700 levels. But again, if we are going to continue higher and put in further breakouts, then of course there is lofty upside objectives to aim for. Now, just to be super clear, this chart could do an about turn at any time. Over the last few years, it's actually been a really good signal to get defensive when this Fibonacci chart puts in big failed breakouts. It was a very, very timely chart for the 2022 crash and also the COVID crash as well. So whilst I am bullish on the market structure overall, if we do start to see kind of big turnarounds and big failed breakouts, then I will pivot on 30 seconds notice. That's just how the markets work. But the longer term outlook for the triple Qs, again, last week, big support levels in the triple Qs have held up. We've seen a bit of a rebound this week in the triple Qs. A lot of the mega cap tech names catching a bit of a bid, obviously Nvidia aside. But I am hopeful that we are going to go and test these next Fibonacci levels here up around 658. The Dow, again, big week this week. Our target actually got met for the Dow 6 weeks ago. Since then, it's just been chopping around, I guess, with the rest of the market. But if we do put in a further breakout above these 480 levels, then again, it's very, very difficult to have a bearish narrative in my view. The NYSE composite, again, it's probably the best chart that I think represents the current market than what we've seen over the last couple of months. I think just generally it's been a bit of a sideways grind over the last couple of months. It's actually been very, very tricky, certainly over the last 6 weeks. But again, if the NYSE composite is going to break out to new all-time highs, then again, I think it's very, very difficult to support a bearish narrative. The one chart that I think I have been very, very conscious of over the last couple of months has been the Russell 2000 and of course the potential implications of a failed breakout. It looks like what we're dealing with here is a pretty standard fake out, shake out, then the breakout. So the small caps, again, if we have rates keep coming down, then the expectation is that the riskiest areas of the market where I've been very, very bullish, certainly on the channel all year, and a lot of the riskiest names. Don't be surprised if those risky names just keep driving higher and just annoy everybody that's bearish. The micro caps, again, met target a couple of months ago, big rebound this week, so I'm actually watching the micro caps with a lot of interest to see if we can put in breakouts to new all-time highs. The VIX has had another collapse, as it tends to do. We kind of spiked up towards 30 a couple of weeks ago, but again since then we're back down towards 16. There hasn't been any kind of move in credit spreads, so again, supportive of the narrative. For those of you that are familiar with the chart and long-time followers of the channel, I just encourage everybody to replicate this chart in some way. It really does help to navigate volatility at certain points. For me, when we're below 20, you just have to look for stocks to buy. Doesn't mean you can't find stocks to short. There's always stocks to short, but I feel like the kind of low-hanging fruit is always to kind of look for opportunities to the long side. Now, whether or not you're a breakout trader or whether you're a value investor looking to buy low, generally speaking, the market's going to reward you for buying stocks rather than shorting stocks over the longer term. I feel like shorting stocks is just a hard life. I used to do it. Very stressful. I don't really, see the risk to reward in it, and certainly the stress since I removed shorting a few years ago. Stress levels have gone down, so I'm quite happy with it. But it's a very useful chart. I think if you are wondering how to use kind of volatility, and I know there's a lot of the VIX gurus out there with a lot of their fancy VIX charts, but honestly, this just keeps me right. It's kept me right for many years. Gold looks like it's wanting higher prices. Again, if you follow the channel regularly, the upside objective that we've got here for gold is up towards 5,000. And since it broke out of that big massive 4-year base 18 months ago, it's just been on an absolute tear, and it just keeps grinding higher. And like I said, I think 5,000 is a very logical target to aim for. Silver is cooking again, new all-time highs. I think today silver is actually closed around kind of 54, 55. So the breakout is very real. The target that we've got here, sorry, I should have actually updated this. The target that we've got here for our clients is up towards around 65, and of course if it keeps going parabolic then we'll amend things, but for the time being I think it's a Fibonacci chart. If you go back to the declines from 1980, it does look like the chart has some merit. So $65 here, it would be a logical upside target to aim for. Now, I am about to rip into around 20 individual stock charts. Now, there's not any order to these charts. There's a lot of really great charts all over from start to finish. Some growth names, some tech names, some cyclical names, some breakout names, some buy low, sell high names. So whatever your kind of approach to the market is, there's probably some charts in here for you. But as always, if you're still here, it tells me you're getting a lot of value. So again, please do smash the like button. It really does help, like I said at the start, with the YouTube algorithm. So first up, where I want to start is with Cypher Mining. Now, Cypher Mining has obviously been beaten to death over the last few weeks, just with the small cap correction that we've had, AI infrastructure, data centers, etc. I think if you have missed the pullback, then I think certainly adding it to your watch list for a breakout above 2250 would make a lot of sense. I did share this chart with social media a couple of weeks ago, just saying that I felt that the pullback was offering opportunity in this particular name. Thankfully, that has turned into something meaningful, and the upside target that we're working with here for the moment is around 40. but it will have to break out above this 2250 level. If you are someone who's potentially a swing trader, for example, you'll notice that it's kind of in a sideways range. When you have a range bound chart, that's supportive of buy low, sell high. So whatever your approach is, I think a breakout above 2250 would potentially signal the next leg higher. NU Holdings, again, another name that I think looks pretty decent. If you're not familiar with the name, big company in Latin America, $83 billion market cap, solid earnings growth, lots of sales revenue, reasonable valuation, very low short interest, and I like it. It's breaking out to new all-time highs, and certainly $20 round number would be target number one, and then certainly technical target number two would be the Fibonacci level from the IPO declines. Apple getting a lot of interest at the moment. Again, one of our long-standing charts broken out back in August, back in the summer. Since then, it's just been moving higher, very steady, and looks like it's breaking out to new all-time highs again. So I think as long as the market doesn't shit the bed, I think you can remain bullish on Apple at all-time highs. One thing to say is with mega cap tech names, I'm not really big on buying them at all-time highs. I much prefer buying them on big dips. I think that makes a lot more sense to me personally. Certainly with the clients that I work with as well, they're not looking to buy Apple at new all-time highs. But if you are a trader and you see opportunity, then I think next upside target there would be up around 315. Nvidia. Now, I've had a lot of questions on Nvidia over the last couple of weeks. Obviously, we had blowout earnings, as they tend to kind of do, but the market has sold off. Now, what I'm looking for here, of course, I view it as an opportunity. I think the Google or the Alphabet competition potentially, I think it's obviously a narrative that sells. For me personally, I would view it as a gift from God if we get a dip back to this kind of 150 level. So I'm actually watching Nvidia with a lot of interest to see how far the dip goes. I think for me personally, that would be a very logical technical level if it even gets that far. I do have clients that are already buying into the dip, as I'm sure many of you watching are doing as well. But for me, I think just as long as we're above that 150 level, if we dip below 150, then of course it's a different conversation in the near term, and we'll reassess levels. But I would be surprised that if we dipped below that 150 level. But let's see where Nvidia goes. Palantir, again, I was talking about the range bound charts, buy low, sell high. Again, if you follow the channel, you'll know that I've been Palantir's biggest bull for the last 18 months. I've done incredibly well on the stock personally. I don't own it at the moment, just to be absolutely clear. I've kind of moved on to other things, but again, this is one of our charts. It's currently buy low, sell high. So level up there around 190 if you are swing trading it. And of course, if it continues to grind higher, then there are further upsides certainly to aim for. Microsoft, again, one of the mega cap tech names. I think it has been really badly hit just with the OpenAI news. I think there's a lot of question marks on OpenAI and the fundamentals behind it, etc. Obviously, Microsoft are heavily involved in that. But if we are strictly looking for price levels to manage risk against, which is essentially what we're in this game for, we're not in the game of predictions, we're in the game of risk management. And the Microsoft chart here, I think as long as we are above that 465 level, I think the dip is fair game. So again, do with the chart what you will. Another chart that I'm looking at the moment is Nebius. I think, again, if you're a long time follower of the chart, I've been one of the biggest bulls on this company. for a while. One of the things I look for when I'm looking for tradable market lows, I don't overcomplicate it, folks. I'm simply just looking for a little bit of a base to develop. And again, if we can get a breakout of this base and back into the box, then again, I think there's 40% upside. But I do have clients that see this going much, much higher in terms of market cap. I'm seeing numbers like $100 billion market caps. Obviously, it's going to have to navigate earnings and blow things out the park. But for the time being, I think if it can get above $100, then I think that could move to 140 pretty quickly, especially considering that there is a decent little 10% short interest on it as well. So that's something certainly to keep an eye on. Lemonade, again, massive short interest here, 20% short interest on this one. Again, covered this chart last month, and it's been working pretty well. But again, it's doing that thing that I like a lot, is it's just kind of basing. And so if I can put in a further breakout there, I would say above that $85 level, then that would represent the next technical entry point if you have missed it lower. For those of you that are wondering what this blue line is, this is a trailing stop loss. I do have very, very specific parameters that I like to use for a trailing stop. So whilst I am bullish on the stock, if we have trailing stop losses that are triggered, then no damage is done. So like I said, I think if it can get a breakout above that kind of $84, $85 level, then I think certainly levels going back to 2021 make a lot of sense. And Netflix, again, pulled back to very, very logical support level, $100 round number level as well. So I think as long as you're above $100, again, I think the Netflix dip is fair game there. Again, I am using Fibonacci levels there for potential targets. Open Door Technologies, now, I've had so many questions on this one. I actually started covering this one on the channel, I believe when it was back at $3, and of course it ripped higher. I think everybody looked like a superstar. Since then, it's been the victim of the Jane Street shenanigans. I think I haven't seen a stock chart yet that Jane Street have bought into that just doesn't look like this. But what I would say, folks, is try not to get frustrated with it. I know it's very, very easy to get frustrated, but the longer term view, if you just look at this as a potential base that's building, eventually, once they start putting in the fundamentals and the earnings, etc., if it does indeed break out of this base, if it gets above that $11 level, then, you know, watch out, the thing will likely explode. It is frustrating. It's been frustrating now for 3 months, but the chart is still looking incredibly bullish from my perspective. But again, please understand, I've got an average down at $3 here personally. So if we do dip below that $5 level, then I would be out. I would be taking what I can get from it. But the chart from my perspective still does look very, very bullish, and I've had a lot of disagreements with a lot of analysts on this one. For those of you that follow me again closely on X, you'll know that I've had a bit of a back and forth battle with George Noble over the last month or two. But for me personally, I am still bullish on the chart and the stock for the time being as well. Now, what I want to do is just bring in one of the charts from our ETF chart book. Obviously, like our money managers have access to all the ETFs, etc. And one of the charts that kind of stands out at the moment is this big, massive 14-year cup and handle pattern in the steel ETF. Now, I know steel ETFs aren't for everybody. Some of you might prefer the stocks, and for me, I think mirroring the steel ETF would be the Steel Dynamics chart. Again, it looks like it's breaking out of an 18-month base, new all-time highs. Again, it is supported by reasonable valuations. Obviously, there's big revenue etc. So I think if steel continues climbing higher, then I think Steel Dynamics might be one of the charts that you could potentially look at amongst many of the steel companies. Another one is Novo Nordisk. Now, it's obviously been beaten to death, since last 18 months, I would say. We have pulled back to the January-September 2022 lows, and we've had a little bit of a shakeout now. One of the things to say is when stocks stop going down on bad news, that's quite often an indication that there's something amiss. There's a lot of bears on Novo Nordisk, and they're very, very vocal. And like I said, when we do get these kind of shakeouts on bad news that turn into bullish signals, you've got to think that Novo Nordisk is probably trying to put in some kind of tradable bottom here. I can see that Mike Alfred is all over it as well on X, and I think it's fair game. I think what I like about these types of charts, if you just look at it, with a bit of common sense, you just need to kind of have a look at it and say, okay, like there's a massive risk to reward proposition. Let's just define risk against those recent lows, and of course the market will either prove you correct or incorrect. So I think there's a tradable low there in NVO. I think there's another tradable bottom there in Robinhood. Now I'm sure many of us have done very, very well on Robinhood over the last 18 months. Again, I like these little shakeouts and then a move. So it's probably a bit of a swing trade to 150 at the moment, but like I said before, I like these Fibonacci target levels. That I don't understand why, but the market just seems to gravitate towards them. So I think certainly Robinhood is fair game as well. Now Tom Lee has been absolutely massacred across social media for his big bullish price targets, I would say, with Ethereum. Now, if you're not familiar with this particular name, it's his Ethereum treasury company. So Tom Lee's eating a lot of shit at the moment, but I think there's a potential here that it is trying to work out a tradable market low here. Now, of course, with a chart like this, you do certainly need Ethereum and you need cryptocurrencies to put in bottoms and reversals. But I think if you are strictly just looking at the Bitmain immersion, then it might offer opportunity. But also as well, you have to understand that if you are looking at names like this, you have to be very, very comfortable with the volatility that comes with it. This will be up and down 10-20% quite regularly. And what I've found, especially with a lot of retail clients, a lot of retail investors, etc., is not a lot of folks are very, very comfortable with that type of volatility. What you'll tend to find is they've learned the old trick that you put in a 5% stop loss or a 2% stop loss and you make money. The market just feeds off those stop losses, unfortunately. That's just the reality. So I think if you are going to go into something like BMNR, I think you just have to be comfortable with the volatility. You need to be position sized appropriately, and certainly wide stop losses I think make a lot of sense. Just from a personal perspective, obviously I don't tell everybody how to manage their money. Certainly my clients don't expect me to tell them how to manage their money. They're all very, very capable of doing it themselves, but certainly just little bits of common sense I think come into it a little bit as well. So again, I think Bitmain immersion, I think there is a potential there for a tradable market low. Barrick Gold, if you are looking to express a bullish position in gold. Now I just want to be super clear about this chart as well. I could have picked out many of the gold miners from my chart book. The reason I've picked out Barrick Mining is I think it was last week I put a chart out to social media for this particular name. The reality is a lot of the gold miners have already moved 100% odd. I've been very, very bullish on gold miners for the last 12, 18 months. They've all done incredibly well. But if gold is going to, continue to grind higher and keep moving towards that 5,000 level that I was talking about earlier, then it stands to reason, of course, that something like Barrick mining would continue to grind higher as well. Again, very, very solid fundamentals behind it as well. Lots of positive developments, I think, with the gold miners. But just be aware that they have already made big substantial moves. I always find it very, very difficult to move into something that has already made a big substantial move. But certainly if there is any weakness in Barrick Gold that maybe pulls back to that 35 level again, then that might offer opportunity there. Lululemon, I think there's a big support level dating back to 2018 here, so it'll be interesting. I don't know if they have reported earnings yet or whether or not earnings is coming up in the next week or two, but certainly Lululemon, you can define risk against those 2018 highs. It is down nearly 70% from its recent all-time highs. It's obviously been taken to the woodshed like a lot of the retail names, but again, I think this is a Fibonacci chart. If you go back to 2008 and you build in the Fibonacci levels, they have a lot of merit. Again, I don't know why. It just doesn't make sense to me why price gravitates towards these levels and then falls away and stuff, but it looks like it's doing it again with Lululemon. Compass Inc. Again, tech company, I think in the retail, the real estate space. I think there's potential there. If you are looking at chart patterns, for example, I think there's a bit of an ascending triangle breakout there. Now, of course, it's going to have to navigate a lot to get back to previous all-time highs, but certainly it's a positive development for the time being. We've also got Broadcom, again, stock I've been bullish on all year. It's been incredible. It looks like it's breaking out to new all-time highs. Of course, big earnings, lots of sales, revenue, breaking out to new all-time highs. I'm probably expecting it to move towards that kind of 500 area over the next couple of months. So I think if you are bullish on Broadcom, I think you can continue to be bullish there. We've got Merck putting in one of those tradable market bottoms that I like a lot. Again, it has made a bit of a move recently over the last few weeks. The target that we're working with here is back at all-time highs. Again, just labour the point, Fibonacci extension levels coming into play as well. Got GE Vernova, again, a chart I shared with social media over the last couple of weeks, just highlighting that when we get kind of corrective phases or challenging moments in the market, I always kind of gravitate towards the stocks that are certainly on my closely followed watch list. These are the stocks with good solid fundamentals, stocks that have done incredibly well on in the past. This has been a stock that certainly our clients have enjoyed over the last couple of years. So it has pulled back to a support level. I think as long as you're above these levels, then it's a swing trade. It's been a swing trade for the last couple of weeks. It continues to work, and I think targets up there around 680 make a lot of sense. I think Google, lots of questions on Google, because again, I've been very, very bullish on this since the April lows. I think things are probably starting to get a little bit frothy up here with Google. Now, that doesn't mean bearish, by the way, just to be absolutely clear on that. It just means that the stock's had a monumental run. It's on a generational run at the moment. The target that I've been working with is up around 370, but if I'm honest, I would have much preferred it to just kind of slowly grind higher. As it transpires, it's obviously gone a bit parabolic. So I'm probably expecting a little bit of a pullback in the near term. What that looks like, we'll need to see, but as always, that weakness will offer opportunity. It is a little bit overbought when you look at something like RSI, for example, but the longer term view that we have there is up around 370, but I think near term it's probably due a little bit of a breather. I don't think anybody would grudge that, but I think that would just be an opportunity to reload. Snowflake, again, is pulled back to a big support level, 240, so it's probably a bit of a swing trade at the moment. If you're looking at kind of buy low, sell high opportunities, that's 18% range at the moment. The longer term target that we have on Snowflake is up back at previous all-time highs, up around 400. Of course, we're going to have to navigate earnings. Shopify actually met our target last month. It's had a bit of a down month, as you would expect, like a lot of the tech names over the last few weeks. But again, if it can break out to new all-time highs, again, I think it's a Fibonacci chart, Fibonacci levels dating back to its IPO. That would bring in lofty upside targets up around 290, and also Targa Resources, maybe not a name that many of you are familiar with. Again, like I was saying a few minutes ago, I tend to gravitate towards stocks that have trended well for me in the past, clients have done well on in the past. Targa Resources was an absolute monster a couple of years ago. Since then, it's just been kind of doing that base thing, and I think there's potential for a little bit of a swing trade there if it can get a move above, I would say, the 50-week moving average, and of course this pivot level there would bring in targets up around that kind of 215 level. Now, I did say at the beginning that I had a bit of an announcement to make, and for those of you that have been waiting, pleased to announce that there is a bit of a Black Friday sale that is now officially live on the website. We're doing a 20% off all of our memberships, so feel free to check that out. If you are wondering who it is I am and what it is I do, there's a link in the description. Our transparent timestamp work is all laid out on the website. But as I mentioned earlier in the video, I think one of the things that I like to kind of do with our clients is kind of work with them. Now, I only use my own custom charts and data. I can't emphasize that enough, but we do provide memberships to all of our premium work, which includes our premium weekend analysis every single weekend, which includes all of our best charts and our weekend hot list. Also includes all of our highest conviction investment ideas. I'll show you what that looks like in just a little second as well. Also provide access to our midweek halftime analysis, which goes out to our clients and members every single Wednesday. We also provide access to a wonderful, highly intelligent community of professionals, investors and traders from all across the world. You'll have access to all of my chart books, which includes all of the trade ideas, all of the ETFs and commodities from all across the world. And if you are someone who's maybe new to technical analysis, we also provide access to our complete technical analysis program, which I'm told is very, very good at helping to build structure, systematic process, etc., etc. But just to show you just what our work looks like, this is the recent idea that went out for cipher mining. As you can see from the chart, it's very, very clear instructions. Nebius was a massive gainer as well. Again, clear instructions on the chart. Like to provide suggested stop levels, etc. SoFi was an absolute monster. AMD going back to $100 earlier in the year, again another absolute monster. Palantir, huge gainer. Nvidia, there's a lot to pick the bones out of. So I would just, if you are someone who's interested in my work, for the last 7-8 years I have logged on our website every single high conviction idea that I've ever put out to our clients and members. So feel free to go and scrutinise that. Make sure the types of charts and stocks that you like to buy are the types of stocks that I like to recommend. Make sure that there's a marriage there. I'm not recommending any pump and dumps, etc. But like I said, for the last 7-8 years, very, very upfront and transparent about all of our high conviction ideas, and they're called timestamps, folks. I think there's a lot of folks in the professional game that just don't timestamp anything, and I try to do things the right way. But I think, generally speaking, I think if you are someone who has a mid-term approach, you're looking, weeks to months out. I think if you're someone who maybe keeps getting shaken out of the market by the latest news headlines, if you keep missing tradable market bottoms or when to get a little bit defensive, maybe you're just a little bit confused by all the different analyst opinions. If you've got work, life, business, you're too busy to find the best charts, and maybe you want to be part of a community because you're sick of social media, I think my work is generally a good fit. And I think if you are someone as well who would like to fast track your learning and how to use technical analysis, I think that's probably where my technical analysis program comes in. Like I said, it's included free with all of our memberships. We don't charge any money for it anymore. So feel free to go and check that out. But if you have stuck around here to the end, as always, please do smash the like button before you go. And thanks for watching, and I hope to welcome you soon. Thanks as always.